What's up, everybody? Thank you for tuning in to another episode of the CPA Zone, the podcast where we discuss tax strategies and accounting tips for entrepreneurs and real estate investors. My name is Ryan Pulis, and our company, the Pulis Group, offers tax planning and advisory services for entrepreneurs like you. Whether it's bookkeeping, tax planning, or CFO services that you're looking for, we've got you covered. Hi, everyone. Ryan Pulis here. Welcome to another episode of the CPA Zone, brought to you by the Pulis Group. Today, we're going to talk about, should I hire my spouse? This is a pretty popular tax strategy, so we'll talk about how to do it properly and clear up a few misconceptions. So first of all, I want to start by saying there are no tax savings by simply putting your spouse on payroll and paying them wages. In this case, you're simply shifting income from one area of your tax return to another. You're reducing business income, but then increasing W-2 income for your spouse. We're going to look at some of the tax benefits that are available to employing your spouse. These are things like retirement plan contributions and health or medical costs. There are also tax-free fringe benefits available to employing your spouse. However, this shouldn't be the sole reason for hiring your spouse. There are other ways to obtain some of these benefits, for example, like a cell phone, but you can do this by putting your spouse on your board of advisors, for example. So let's get into it. The first big tax benefit to hiring your spouse would be to cover health or medical costs. So you have health insurance. You don't necessarily need to hire your spouse for obtaining health insurance. You can insure yourself. There are some special methods when it comes to obtaining health insurance for a business owner. When you have an S corporation, you, rather than deduct the cost of health insurance, you add it to box 1 of the W-2 and then take the deduction as an adjustment to income on your 1040 for self-employed health insurance. So we're really more focused on high medical costs. These are high out-of-pocket costs. So one method to making these deductible is to hire your spouse as an employee and establish a medical reimbursement plan. This is usually called a Section 105 plan. And the employer can reimburse the employee, your spouse, for healthcare costs, making them tax deductible for the business. Now, this doesn't really work well if you have other employees because you'd have to treat them all the same, and you might end up spending a lot of money covering medical costs for your employees. However, if it's just you and your spouse is your only employee, this can be a great way to write off medical costs that would otherwise be subject to the 7.5% limitation as an itemized deduction. When you itemize medical costs, you don't receive a dollar deduction until medical costs exceed 7.5% of your AGI. So when we're using the Section 105 plan, it's typically going to work best with sole proprietors and C corporations. And S corporations require a special workaround. We're not going to dive into that here. And as I already mentioned, if you have other employees, it's not going to work that well because the costs can get pretty expensive. So the Section 105 is not going to work. What you can use is you might want to look at an HRA instead if you have other employees. But let's just take a look at an example. Let's say you're operating as a sole proprietor and you have high out-of-pocket healthcare costs. You hire your spouse to work for you. The business sets up a Section 105 plan to reimburse your spouse employee and their family, which includes you, for medical costs. If you have, let's say, $20,000 in medical expenses and you're in the 24% tax bracket, you would save $4,800 in tax by setting up this plan. The $20,000 in medical costs becomes a deductible business expense. The next big tax savings that comes from hiring a spouse is with retirement planning. So you want to maximize retirement contributions by hiring your spouse so they can contribute to a plan. This should only be considered after you're already maxing out your own retirement as the owner. So make sure you're already maxing out your contributions. You would hire your spouse to be in a position to put away even more money. So let's take, for example, a single owner sole proprietor with a solo 401k that hires a spouse. You're already maxing out the employee deferrals for yourself plus the employer profit share. So now you hire your spouse. They can also contribute in the form of employee deferrals, and then the company can contribute based on the employer match. So as a reminder, the 2023 401k contribution limits, the employee deferrals are $22,500. So you do that for yourself as the owner, and then you can pay your spouse $22,500, and that would go directly into a 401k, and you're basically reducing their wages entirely. And then you have the employer match on top of that, which is typically based on self-employment income for the owner, or if you're an S corporation, let's say, then it's 25% of your wages. And you would also be matching 25% of or up to 25% of your spouse employee wages. So you really have the ability to put quite a bit away into retirement. So if that is your plan, hiring your spouse is a great way to accomplish this. And some other benefits that come with hiring your spouse are some of the tax-free fringe benefits. So you have things like life insurance up to $50,000 for a group plan. You can insure your spouse with a policy up to $50,000. That's tax-free. There are things like working condition fringe benefits that help them do their job, such as a cell phone. Now, this is what I was referring to earlier. You don't necessarily want to hire your spouse just for something like this. You can put your spouse on your board of advisors, and as a requirement of being on the board, they have to have their cell phone available, and you can reimburse that cost by having them on your board and advising the company. Another potential benefit to hiring your spouse would be for business travel. If you're traveling to a business event and your employee needs to attend, you and your spouse can both travel free. Where if it's just you that's working in the business and you bring your spouse along, you're going to pay out of pocket personally for them to attend with you. As an employee, however, they are allowed to travel and their costs are deductible as a business expense. Now, if you're going to hire your spouse, you have to make sure you do it correctly. So your spouse must actually be performing work and have job functions in the business. They need to earn these benefits. You can't just simply write a check and call it wages without them actually performing some type of service for the business. You also need to be careful and make sure the rate of pay is reasonable. You can't overpay your spouse and make it excessive. So make sure the rate of pay is reasonable. Now, some disadvantages to hiring your spouse. You may end up paying increased payroll taxes. So this is why we say you don't want to just hire your spouse simply to pay wages, because when you pay wages, then you're responsible for withholding taxes, and this includes payroll taxes like Social Security and healthcare. So you're paying the employer side and withholding from your spouse's W-2 for the employee side. So again, this is why we do not recommend hiring your spouse as an employee simply to pay them wages. You get the business deduction, but that just shifts to W-2 income for your spouse. So no real tax savings there. And you're going to have the payroll taxes to deal with. So again, two main benefits to hiring your spouse as an employee are the high medical costs. You want to make those deductible to the extent possible. And you can do this by using something like a Section 105 plan. And we also have retirement planning. If you as the owner are already maximizing your retirement plan contributions, you can hire your spouse to take it to the next level and put even more away into retirement. And if you decide to go this route and hire your spouse, make sure you do it right. They're actually performing work and you're paying them a reasonable rate of pay. That way you can take advantage of these tax-free benefits. That about does it for today's episode. If you enjoyed this episode, please leave a 5-star review and hit the like and subscribe button. And until next time, have a great day. So that about does it for this episode of the CPA Zone. Thanks for listening, and I hope you found something valuable that you can take away. We are taking on new clients, and if you'd like to work with us, then go to our website and fill out the client intake form on our contact page. This can be found at thepulisgroup.com/contact. That's THEPULICEGROUP.com/contact.